Kinzo VI! Onegai shimasu! Okay, welcome back to the channel. In this third video of the series, we're going to look at business validation. After picking up a stock and after looking at their financials, we're going to have a look at validating the company as a business. Okay? More specifically, we're going to be looking at what kind of competitive advantages the company has against their competitors. Also, we're going to kind of analyze the business to see if it's a sound business, trying to understand who owns the business, and kind of start thinking about, is this a business that will be around for the next 10, 20 years? We're also going to try to understand the business in more detail. So kind of understanding what kind of products or services do they sell, what are the competitors in the market, how the revenue is being generated, where are the risks and opportunities of their business or businesses, and also looking at any favorable or unfavorable news in the press about the company. And then last but not least, we're going to pick into management. We're going to have a look at who is managing the company, what is their understanding of the business and the industry, do they have any skin in the game, meaning are they committed both financially and ethically to the business, and also have a look at how the insiders, so CEOs, CTOs, CIOs, are behaving. Are they buying stocks on the business? Are they, selling massively their options and stock options on the business? So we're going to have a look at all that. Okay. So without further delay, let's jump into how to validate a business. Okay, let's start then validating our stock. So if you remember, in the last two videos, in the first video, we used this app called Finviz to screen for stocks. We then kind of copied the outcome of our screening into a spreadsheet that I have. And after that, we picked up one individual stock. In our case, that was Intel, and we used the Morningstar website to get most of our financial information, and started putting together a competitive analysis of Intel against their competition, and also an overview of the financial performance of Intel over the last 10 years. Okay, and I went through, what kind of metrics do I want to see in a stock? Basically, I want to see some growth in the revenues, growth in the profit, constant growth over the last 10 years. I want to see some positive and also growth in the cash flow, and I want to see some increase value for shareholders. Namely, I want to see the book value per share of the company increasing, and also I want to see increasing earnings per share and stable dividends. Okay, and we actually saw all that in the Intel stock that we used as an example. Okay, so the next step is to validate the stock. And what do I mean by validating the stock? I have a set of rules that I've set for myself that is gonna, kind of make it or break it. I mean, I'm going to validate the stock based on these variables that I've chosen for myself, and then based on the outcome of that validation, I'm going to give it an overall score, an overall validation, if this is a stock that I want to invest in or not. Okay, so let's start with the easy ones. This is all kind of outcomes of the performance that we've done in our stock, in this case Intel. Okay, so The first one has to do with growing revenue, right? I'm looking for a company that is growing their revenue year on year, okay? So if we look back, again, if we look at Intel, that's pretty much what is happening in the last 10 years. More or less the company is growing the revenues over time. Okay, there's some years which is slightly lower than the previous years, but then overall, in the long run, over the last 10 years, Intel, increased their revenues significantly. So, I have three options here. Pass meaning that he meets my criteria. Maybe, I'm really not sure if it meets my criteria or not. And then fail, meaning it doesn't meet my criteria. So in the case of the growing revenue, I'll give it a pass. Okay, so it does meet my criteria of a business where I want to see growth in their revenues. The next criteria is positive cash flow. Again, going back to our performance, that's what we see. We see positive cash flow actually, increasing in the last three years. So that's good. So again, it meets my criteria. I'll give it a pass. The next one is growing book value. Again, we've looked this a couple of times now. Increasing book value over time. This is, again, good business. It's increasing the value to its shareholders. So absolutely, yes, definitely a pass. Okay. The next one, growing earnings per share. They're kind of flat between 2011 and 2015, but over the last couple of years, they have increased their earnings per share. So I'll give it a pass also. Next has to do with debt, how much in debt the company is. My passing criteria is a debt to equity which is lower than 1 or 100%. In this case, we're going to look at the analysis that we've done against their competitors, and the debt to equity of Intel currently stands at 0.42, so absolutely it does meet the criteria. Okay. So the next three have to do with performance. Okay, so I want to see efficiency. I want to see businesses that have a growth profit margin of more than 30%. Okay, so again, if I go back to our performance here, I do have that metric right over here. I'll probably color it in a different color so it stands out to us. Let's put this in blue. So as you can see, year on year, Intel has always had growth profit margins higher than 30%, actually higher than 50%. So, again, a pass on this one. I also want to see companies that have at least operating margin higher than 15%. Again, going back, I'm going to color this again so it stands out. So, operating margins, maybe not a reddish because it's kind of a warning sign. Let's give it a, yellow here. So yeah, absolutely. Over time, in the last 10 years, the operating margin has been always larger than 15%. So a pass also. And then finally on this one, I want to look at net profit margins higher than 10%. Again, going back to the last, in this case, I only have the last 5 years. Absolutely yes. Again, no, too dark. Apologies for that. So yeah, net profit margins higher than 10%. He also meets the criteria. Okay, and then last but not least, on this set of variables or passing criterias, I want to see constant dividends over time. And if we look at Intel, they have been growing their dividends over time, steadily growing their dividends over time. So absolutely, they haven't missed a dividend payment in the last 10 years, and they've slightly been increasing their shareholders' dividends. So absolutely, yes, another pass. Okay, good. So all green on this group here. So the next group of conditions or variables that I'm going to look at, it's more subjective. Okay, well, some of them are more subjective. The first one is, how much do I, or as an investor, understand Intel's business? Okay, so we all know Intel. It's one of the largest, if not the largest, semiconductor company in the world. We've got used to their products in our laptops, in our desktops, but it's always good to kind of have a look at what the company is doing beyond what we already know. Okay, so in order to do that, my advice is to go to the 10K. This is the annual report that any company has to submit to the regulator, to this, in this case, to the Securities and Exchange Commission. And in this document, in this case, Intel kind of describes who they are, what they do, their performance over the last 2 years, and you can find competition information here and so forth and so on. Okay, so for this, in our case, what we're looking for is try to understand the business. And usually these sort of reports are quite prescriptive in what they do, where they are, which is the industry, and more importantly, what are they doing in terms of their technology to secure to secure future revenues. And if we go to page 19, we can see that Intel covers a broad range of technologies. So they have products for autonomous driving, 5G, client connectivity, cloud computing, Internet of Things, client computing, and AI analytics. Okay, so this is a company that wants to be pretty much in any sort of area on the semiconductor industry. So that's good to see. Maybe they won't be top dog in every single one of these verticals or sectors or segments, but they will definitely be, one of the, if not the main company in some of them, if not most of them. Okay. So that's my advice. Have a look at 10K. If you don't know a lot about Intel, other than they make processors and semiconductors, have a look at the 10K. Really gives a lot of information on where their revenue is coming from, which areas the revenue is coming, where are they investing. In the case of Intel, they are investing in a lot in the cloud computing side. And also on the 5G and autonomous driving. Okay? AI and analytics also, client computing, so standard laptops and so forth and so on. That's the main business, that's the core business. But the future will be most likely Internet of Things, cloud computing, 5G, and autonomous driving. Okay? So keep an eye open for this. Yeah, so really good source of information for you to know about the company. Okay, the 10K or the annual report. Some companies only issue the 10K and they have the annual report embedded here. Some companies issue a different document than the 10K and they call it the annual report. But I like to go straight to the source. In this case, it's the 10K, and you can find this in the Intel website. So going back to our criterias, Do I understand enough of the business, to invest in this company? I would say yeah. Yeah, also because technology and semiconductors, it's one of my backgrounds. Okay, so actually, this is a very good point. I mean, Warren Buffett and Peter Lynch said many times that you should invest in the industries or in the areas that you know about. Okay, so this is really what I recommend. And then technology, it's my background. It's my academic background. I have a bachelor in engineering, actually in electronics. I also done most of my career in the technology sector, kind of associated with energy and the industrial side. So I would say that those are my areas of choice, and areas where I feel more comfortable and where I can, if I don't know anything, I can catch up with the industry quite fast, and the learning curve is not so steep for me. So I would say that those are the three areas that I think I should be investing with minimum effort to learn a lot about the industry. So you probably won't see a lot of stocks of biotech and pharmaceuticals just because it's not my area. Doesn't mean that I cannot do a valuation of those companies, but I don't know enough about those industries to personally recommend or invest myself. Right? Maybe that will change in the future. Depends on what kind of stocks you want me to analyze, and kind of force me to learn a little bit more outside of my comfort zone. Okay, but just to restate, my comfort zone is technology. I've been around for quite some time. I've been working with Intel technology since the late 80s. So I understand the business. Next, it's the moats or competitive advantage. Now, this is a little bit subjective. Okay, so again, you do need to understand the business and understand the industry in order to know if the company has a moat or has a competitive advantage against their peers. You need to know a little bit, right? Just enough to be dangerous, so to say. So in this case, arguably, I say yes. Now, some people may disagree, and if you look at the competitors, you have AMD, a long-standing competitor of Intel, but also some new kids on the block. You have NVIDIA, which a couple of years ago didn't exist, and came out of the blue, specialized initially in graphic cards, and then they're taking the world by storm. And then you also have TSM, Taiwan Semiconductors, really good company. It's growing a lot, and yeah, really good company to keep an eye on, especially if the price goes down. So yeah, but still, I think that given the backgrounds of Intel, given the level of expertise of Intel, given that it's based in the US, given that it owns not only the design, the IP, but also they own manufacturing equipment, and they own, manufacturing facilities. Some companies that you see here in this list, they do design the semiconductors, they do design the processes, but they do not manufacture them. They outsource the manufacturing to other companies, like TSM, for example. Intel is one of those few examples where they actually are a vertical integrated company. They design the semiconductors, and they also have factories where they actually build them. Okay, so I do think that they have a competitive advantage, perhaps not as large as if it was 20 years ago, where they were pretty much the only big semiconductor company. Maybe even, maybe AMD could challenge them in some areas, but they were the company. So maybe today they don't have as a big a moat as they had before, but I still think they have it. Okay, so I'll give it a pass here. Now the other one is, do they have competent management? Okay, so this is a little bit more tricky to find, and you may not find this for all companies. If you don't, just leave it blank, or just put it maybe, you don't know. So in the case of Intel, recently they've changed their CEOs. Okay, so Patrick or Pat Gelsinger, I hope I'm saying his surname right, just joined Intel as their new CEO in, I think it was February this year, so about a month ago. I did a little bit of background checks on Mr. Gelsinger, and apparently he's well known in the industry. He worked for Intel for nearly 30 years. He was actually one of the architects of the original 486 processor, he's an electrical engineer, so he knows his stuff. He's been around for many years. I think he left Intel a couple of years ago to pursue a higher career. He was the CEO of VMware, and I actually went and saw the performance of VMware while Mr. Gelsinger was a CEO there, and there was a significant increase in revenues, and VMware grew a lot under his leadership, and now they brought him back to lead Intel. So, having looked at his backgrounds and the knowledge he has on the industry, and the fact that he belongs to Intel, he was, his first job was at Intel, I'm pretty confident that he knows his stuff. Okay, and also, if you do also a little bit of an investigation here on the Morningstar website, again, if you go to executive, okay, and you see transaction history, okay, you can see here that in February, right, as Mr. Gelsinger became a CEO, he did a massive acquisition of stocks. Okay, so I'm not sure if this was really an acquisition of, using his own money, of this, or if this was stocks given to the CEO, as companies usually do, because I see the market value here 0, so I'm not 100% sure if he actually bought the stocks or if they were just assigned to him. Nevertheless, clearly he has some skin in the game, right? Based on his background, based on his past, based on his performance in VMware, based on the fact that he has a lot to stake in Intel, I'm pretty sure that he's a competent person to lead the company into the future. So I'll give it a pass here also. And then last but not least, I want to see a company who has a high level of free float. Okay, what does this mean? It means that the company has most of their shares actually available for shareholders to trade. Okay, some companies don't. Some companies have, for example, 40% of their shares available to individual retail investors or investors in general, but then the rest is owned by another company. Or you have even odd situations where you have a company that is trading, say, 45% of their shares, or 50% of their shares, but then the other 50% is owned by the state or by a state. So in this case, I'm looking for companies who are mostly traded in the stock exchange, where most, if not all, of their shares can actually be traded, right? They are not locked in by any institution, be that public or private, okay? And then if you look at Intel, and if you come to the Financial Times, there's other places where you can find this, but you know, I find that Financial Times has this information readily available. You can see that 100% of the shares outstanding of Intel are free float, okay, meaning that they can be traded in an exchange, because you know, that kind of gives me confidence that there's not a major player around waiting to kind of subvert the rules of the game. Okay, so again, I'll give it a pass. Okay, and then finally, based on my assessment, I mean, in this case, it's obvious, isn't it, that the overall validation for Intel is a pass. So this is, given its outlook with their competitors, given on the performance of Intel over the last 10 years, given all the pass marks in my criteria, you know, this is definitely a company that I would invest in it. Will I invest in it? Well, I don't know yet, right? The next step of my process is to value a company. Yes, I'm willing to invest in Intel, but only for the right price. Okay, so that's for another video. I hope you enjoyed this video. Give me some comments in the comment section below. Let me know if you like these sort of videos so that I keep on doing them. Thank you very much. Okay, thank you very much for watching the video. So far in this series, we've covered how we screen for value stocks, how we look at the company financials and do a financial analysis on our selected stocks and businesses. And in this video, we covered how do we validate a business, looking at the business, several components of the business, and kind of validate if this is a stock or a business that we want to invest in. And in the next video, we will be covering how we value a company. Okay? So if you like this type of content, please give me a thumbs up. That's going to tell me that there are people out there which is interested in this kind of information, and I will keep on doing these sort of videos. Also, if you want to be notified on the upcoming videos on this series, please click the subscribe button and the bell icon, and you will be notified when I upload the next video. So I think this is all for today. Thank you very much for watching. I'll see you out there, and stay safe. Kinzo vi! Arigatou gozaimashita!